right? I figure I'd do a video about my strategy since I'll be posting videos of my trading recaps. There might be some curiosity of my strategy. All right, here is the system written down. So we can do it over, let's say, to start Wednesday, October 8th, market open. So market open candle right here. Let's go over them for a second. Just a brief touch base on them. So the trading system itself is trend trading, right? Then kind of my second system is a market open system. So I trade market open. Usually 9 times out of 10 I'm trading market open. But I kind of combine these strategies. For example, right here, it says continuation if presented. It almost turns into this trading system itself. But this trading system, say market open, doesn't really have a strong draw, we're waiting on something, then I will follow this one. Simply, I'll follow this system. But if we have a strong draw, as we see, and continues to rally or whatever it may do, then we stay in or we exit, see reversals, and use the entries from this trading system up above. And the way I learned trading, it was very systematically put by a mentor in a learning campus. It was very structured to the point where the systems we made can be applied to any market. So originally, I started off learning crypto trading. Well, I learned about prop firms from a friend. He told me I should give them a look. So I tried it with prop firms. And the system works. So that's the way I learned it. Is it's not for one market, it can be applied to any market. Obviously, you'd want to do some back testing to see, okay, this works better with crypto. For example, Ethereum, right? I did 100 back tests on Ethereum. Win rate was good. So you'd want to do it probably on NASDAQ, like if you're trading prop firms, just to see what you can improve. Obviously, over time, you'll find things as well. But trading system right here, I might change this to trend trading, yeah? Trend, we'll just do trend. So these trades trends, right? So the ways which we learned is you can trade these moves, right? A trend, higher lows, lower highs, vice versa. Or you can trade these, right? Ranges. I chose trend trading because it looked like it was best for my personality, which it is. So either I could, either at the start of when I was learning trading, I can learn to trade this, or I can learn to trade this, right? Highlight it so it's not as confusing, right? So whichever one I want to do, I could choose out of those. I chose trend trading, so I wrote down my system rules. We'll go over it. Let's do October 9th market. We can move back further, but I mean, today was pretty self-explanatory. So I have another friend as well. He said it was like the manipulation distribution. I didn't learn it that way, so I don't even call it that. I mean, I guess it could be classified as that, but the way I learned, which helped me develop the system, obviously, it started to move. The market moves in 4 different ways: accumulation, right? Markup, distribution, and mark down, which is very true. The market will move in 4 different ways. It's either building for a move, it breaks with the move, it distributes price, rest, and then reverses. But keep in mind, I'm not saying every single time it's going to do this. It could happen whichever way the market so chooses to be. But it's going to be one of those 4 phases, which helps understand the system. So, for example, today, let's switch to a line chart. It might be easier to see. So, for today, as I was doing my analysis in the morning to see what potential trades there are, well, what's today might even going to look like, what can I expect, what are my targets going to be. A huge thing is targets. You can't trade without target. You have to know where you want to go at least. If you're just shooting for Narnia, the sky, hoping and wishing, it's never going to be profitable. You might get lucky a few times, but that is not a good way to go about it, right? So, anyways, we'll go back to it. So before I even look, I look at what phase we're in of the market. You can kind of see it from any time frame. The one I like to look at it is from the 1 hour. The 1 hour is the bigger picture, you know? That's the overall. If you go to 1 minute, in my personal opinion, there's a lot of noise in here. You can still see what phase the market's in. You can get a deeper look. So I'm not saying it's bad, don't use it. Not at all. I use it. But I'm saying for overall pictures, I look at higher hour time frames because that will tell you more of what phase the market's in. So clearly we're on the rise. From here, uptrend. That's why I like using the hour. I really don't ever use a 4 hour. I mean, maybe if there's a 4 hour gap, it's pretty strong, but that's how I at least identify what phase the market's in, you know? So I'd say, okay, October 8th, we're trending upwards. So we were in an uptrend. Well, then it kind of just ranges from here, right? From here, I'm doing this fast, so it's going to be a little bit messy. From here to here, it's ranging. It's distributing price, it's consolidating, you know? The market's not going to go up and shoot back down. You know, maybe something crazy happens, but. So I say we're on an uptrend and we distribute price. Well, how do I know where my draws are? How do I know what the market's going to do? I'd say simply right here. Okay, we had a market structure break. For me, market structure break, change of character, whatever you want to call it, whatever you call it, is fine. So I'd say, okay, we had a market structure break right here. You can just put it right here. So yeah, we're on the 1 hour. Yeah. So market structure break, it closed below. So I'd say, okay, now for me, market structure break, in short and simple, to make it as simple as I can, that the market is going to change the way it's moving, and whichever way it breaks, a trend reversal is coming. So from right here, from Asia session all the way to London, it consolidated, which overnight I was wondering if it was going to, and it did. So I'm like, okay. So we're on an uptrend. Price is really bullish and left gaps in the market, which need to fill in price. Fair value gap. Very simple. So I have it right here. No, I don't. So we had a market structure break and price consolidated. And now we have, these already got taken. It was on the 15-minute hand ticket. So now identified what phase the market's in. Uptrend, market structure break, consolidation. All right. Well, it looks like we're headed down to a downtrend now. Now we have targets that price needs to fill in, right? So I take 15-minute gaps, 15-minute fair value gaps, right? So over here, 15 minutes fair value gap. Simple. Then I look for other ones, obviously. 15-minute fair value gap. Another one right here. They're very easy to spot once you get the hang of it. You can just have an eye for it and see, oh, look, fair value gap. So 15 minutes, fair value gap again. And then price will do this, but for these, usually 1 hour and 15 minutes sometimes do share fair value gaps. I've really noticed 15-minute fair value gaps, the way I look at it, the way I trade, almost always get targeted, right? So in last video, I had an hourly fair value gap marked out. So sometimes you'll see two candles of a 15-minute as one, or three candles of 15-minute as 1 hour fair value gap. So we can do a target like this. So now I have three targets. I don't know what price did right here, right? So say I'm going in a market like I did today. Well, 15-minute are very prominent with how the market's moving. Like, what's it going to do, you know? So I use 15-minute structure because it's really solid. It almost matches up with the 1 hour, right? So once I found out the structure from 1 hour, looked at what the market is in, then I take 1 hour confluences, then 15-minute fair value gaps as my target. So we're targeting 15-minute and 1 hour fair value gaps after we identified what phase the market is in. Pretty simple. Well, I'm not going to execute on the 15. I can't know what's going on right here, right here, right here. So I execute on the 5-minute. The 5-minute has good structure. So here we are. So the market at open was consolidating. It was ranging, whatever you may, whatever you will. Right here. So I marked out the range we're in. And I already had looked above. We really didn't have anything pulling us higher. Went to all-time highs. I think the only thing I spotted was this 5-minute gap. But I mean, when you're looking at gaps, the higher one's gonna get filled. This little 5-minute gap doesn't really mean much unless the market's like in this area. Like, for example, a 5-minute gap right here, as we're already in a move, it's gonna have way more likely to get filled and the market cares more about it than some random 5-minute fair value gap from 7:50 p.m. the day before, right? So those ones you can almost ignore all the time. Unless we had a 5-minute gap like right here, it'd want to tap it, probably go lower. So market opens and we're in a range, right? Our targets are right here. It's very simple. So the market open, we have a strong draw to one side. So say we have draws on both sides, that comes a little tricky because you don't know which one's going to go to. You can say, oh, it's closer to this one, but yeah, but who's to say it's going to go to that one, right? Who's to say price will even go near any of them? So strong draw to one side, 3 15-minute fair value gaps after being very bullish and consolidating and market structure break. Okay, we're in a downtrend. So we had a strong draw, really close, another one, continuation, right? So I enter off, market open, enter around right here. My stop loss goes above the interim higher low of the candle, which is the previous candle's higher low, the wick of it, right? So I'll go above this wick. Then I'll target equilibrium of the 15-minute. So I call this a retest. Price after market open said, hey, do we want to go higher? Do we want to go lower? Price went up to here, rejected that, then it retested. So now we can really, really confirm that the market's going to keep on moving. So then during that move, during this being in the market open trade, I go down to the 1 minute and see if price retested on there. Price retested on there and continued. So now I'm okay. We're in continuation then. So the market open, we had a strong draw to one side. Risk to reward's kind of subjective to whatever the target is. They're not always going to be the same length, right? But the stop loss will almost always be the same, above the interim high or low of the previous candle. So we had a retest, really good for us. We had a retest right here. I'm like, okay, price shouldn't push back really much higher at all. So then we trade the continuation. So we were like, okay, went down here. Today, that's when I moved my take profit to down here. We had this engulfing candle, this bullish engulfing candle. I wasn't really tripped up about it. If you're looking at the overall picture, it kind of keeps you sane in input. This down candle can obviously be told this is really bearish. So I wasn't really tripped up about it. I looked at the scaled upwards to the 15-minute. I was like, okay, we had a close way over here. We had a little doji candle. Sometimes I play close mind to these because the doji candles can tell us a little hint. It's like a supplement to a system. It's not going to be the main part of a system. But right here, I was thinking, okay, well, the market may be confused. It don't want to close out, should, especially on a 15-minute. I'm just going to still trust my system that I've done everything right to this point. Price comes up to here, even to up here. So during this trade, I would have gotten filled up a little lower. Price was really close to my stop loss. Was I tripping out about it? No. Not at all. Because this is a system trade, systematic. So even these, price overall from here to here was continuing. Higher lows, lower highs. So it was downtrending. And we had targets. So I simply, if we're in a continuation, I'll just let the runners run. And if you watch the last recap, you know where we messed up right here. But ideally, you can let it run. And that is our target. We'd be out of the trade. We had to break a structure, retest, continuation model. See our exits. This is actually a good example of the exit. And again, if you watched the last video, this would tell us our, which one was it? Bear with me. This right here was our exit. So is that 846 candle? That'd be the 850 candle. $10.45 candle. Looking at the wrong one. But 10.45 candle. This would be our exit. Right here, this would be our sign on the 1 minute. That would be our sign. So I guess we can even go back. So during this, if there's any confusion, I first look at the bigger picture and then the 1 minute so I can get a really deep dive into are we bullish or bearish per candle. See these ones that engulf a whole entire one, then retest and then bounce back up again. That's a reversal. We're bullish, right? Especially if it made gaps on the way down, like it made one right here. Typical textbook, okay, exit. You necessarily don't want to stay in this trade because who's to say price is going to keep on going down? We truly don't know it. It could just sweep upwards and you're wishing you would have gotten out and listened to the rules. So exits right there based off of the candle placement on the 1 minute, and all the closes on the other time frames, to be honest. It's quite simple. Volume today, I paid a little bit of mind to it, but I use it on very particular moments, mostly all of the time. But in times like this, it wasn't choppy price action. It was almost a choppy downtrend though. Does that make sense? So these volume candles can be wherever at all times. So instead of looking at the 5 minute or 1 minute volumes, I feel like even that is way too much noise. So look at the 15 minutes volume. The way I use volume, this black line is the average price, right? This is this bearish candle. This is this bullish candle. Very textbook volume. So right here when these connect, trends follow least resistance, right? So we have a strong down candle. We really don't want to see a large bullish candle afterwards with bullish volume above average buying volume because we're in downtrend. So that would be a little sign, little hint saying, hey, well, price is doing what price does, right? It's tripping people out. It's moving. So there I would be like, okay, well, it's telling me a hint. And volume is particularly pretty good to use. Coming in, market open, high volume, close to its swing low, and retested, and then continues. That's how I trade it. That's how I use volume. There's a lot of other ones, but I really don't use it that deep. Again, it's a supplement to a system. It's not the whole entire thing. So it's almost like this market open system and this trading system go hand in hand. I can get into it a lot earlier. I can catch the whole entire moves if given. But that is the market open system continuation trading system that I use today. Obviously you can have the best system ever, but the system only does so much that you will allow it. It's when the psychology gets involved, which really makes you question your system. Oh, is it the system? Should I try this? I try this. This is working for everyone else. This is working for me. Mainly psychology based, like in today's last recap, y'all already saw it. So that is a recap. And let's look for a time and place where price didn't really have a strong draw and we had to wait to use this trading system over the market open. All right, so we found a date. We have our targets already listed. We look at this, say, well, been on the uptrend. Price really hasn't consolidated much, so we might expect a little bit of chop before it makes a move, right? Big chop, little chop, doesn't matter. This is October 7th. So even here. So we're in this range right here. We have our targets. We're waiting for something to happen, something to break and close and retest. Well, it touches it. This 10 a.m. candle comes to the fair value gap, but it broke. We need to retest 50 to 75%. So where this line is pretty much. But as you can see, it engulfs it. It's like, all right, whatever. What does price want to do? Price really doesn't make another move to the swing low till about right here, till this 1020 candle. So this is using the trading trend system you see at the top, not the market open. Right. So price breaks the swing low, and then it retests with this candle right here. So then now we can move our stop to the interim high right here. And then the risk to rewards, they're usually around a 3 risk to reward continuation if you wanted to. See, we can hit this one, we can go right here. Whatever the market tells us, we just do, right? We're not trend guessers. We're not guessing the trends. We simply just follow them. And that's about it. So it doesn't make a move till then. You could trade market open and be in this chop, be up and down, but it doesn't really, you know, there's nothing to really say it's going to keep on going up. Again, what draws are you going to be using from all this previous? No draws. The price really hasn't consolidated as much as it wanted, as much as it should. So now we're just going to wait. So we break the range right here, but then again, this next candle doesn't retest, so we can't even enter, right? So say this 1025 breaks 1020, breaks the low, and then retest, okay? Then it continues, retest, break. So these are just breaks in structure, over, over, over. That's about it. Break a structure, break a structure, break a structure. This doji candle, kind of something to pay mind to. But again, if we're truly bearish, price shouldn't rip past this last candle, so we can only use it as protected spots, right? And then as you can see, the market went all the way down. So very simple. If we have a draw, then we trade the market open and continuation with the trend trading continuation model. If we really don't have a draw and the market isn't in a good phase, then we simply just wait for the market to tell us and do something using the trend trading system, continuation, or reversals. All right. It's a very simple model, almost textbook simple. Simply, you're trading this, or you're trading this. You're entering on these highs and these highs. You're entering on these lows and these lows if you're in an uptrend. Very, very simple. If we're in a downtrend, why would we enter right here? You know? It's almost that does not make any sense. It's going to retrace all the way back. Then we gotta see if the market even wants to keep on going down. So again, uptrend, continuation, breaks a structure. Then we enter at these lows. These lows right here. If we're in a downtrend, still breaks a structure, we enter at these highs. And we exit until we see sign of reversal, either with a strong 1 minute close, strong 5 minute close, strong volume close, or simply just the end of a trend. And that's about it. That is my system, and that is how I trade it. And yes, definitely back test it though. See what works for you. I mean, I back tested this system plenty of times. I know pretty much this system like the back of my hand. I could probably trade it in my sleep. But that is my market open system and essentially trend trading system. Continuation, reversal, exit. Very simple objective rules. I don't have to guess. I know my targets. I know the reason I entered. I know the reason I exit. I know the reason I stay in. That's all you need for a system. You don't need a... I used to actually use EMA bands, matter in fact. So, funny enough, I literally used to use these. It's supposed to be double EMA bands. But any of y'all who know what EMA bands look like, I got into a real bad habit once of using EMA bands a lot to the point where it almost dictated my whole entire trading day. That's not trading. That's not a system. So it's gotten a lot better. I've just improved it over the time I've been trading it. It's a lot of bands right here, goodness. But yeah, just thought to make a video, touch up on it. Been making a lot of videos, trading recaps. So there is my system.